Welcome to Enlightened Wealth Strategies, the podcast where insight and knowledge meet opportunity. Please join us as we navigate the world of finance, discovering actionable strategies to help you achieve your personal financial goals.
With decades of combined experience, we're here to shed light on the topics that matter most to your financial well-being. Whether you're accumulating, preserving, or distributing your wealth, this is the place for you.
Now let's dive in and start your journey to financial enlightenment.
Good morning, James.
Good morning, Jim. How are you today?
I am good. Welcome to another episode of Enlightened Wealth Strategies.
Yes, welcome. Today we're going to discuss something we haven't really discussed in the past. Yes, in the past we've had quite a few number of guests who have, they've been alternative funds and different types of investment approaches. We've had professionals discussing, for example, special needs. And in the future, we'll probably have a lot of other professionals too. But one topic we have not covered, and I'm sure many people are aware of it.
And curious.
It's the cryptocurrency world, and it's beginning to take on another level of interest because we have an administration that is talking about utilizing it, and you have a lot of governments that are using it as well. And it's being accepted more and more widely. It isn't, how shall I describe? I was having an interesting conversation with a gentleman yesterday, and I likened it to, ancient civilization when it first came out. And now recently, over the last year or so, the SEC has stepped in, and it's perhaps a little bit more regulated. Wall Street is involved, which always means that they want to make money, of course.
Mm-hmm.
And so I then analogized it to, we've moved from ancient civilization to more into the Wild West, and now we have sheriffs.
Good.
So I don't know if that's a good analogy or not.
Well,
but
I like it.
So it might apply.
Right.
Because it is fairly new. And I suppose one of the things that we could talk about before we introduce our guest, we do have a special guest, is just some of the basics, the fundamentals. Most people are familiar with Bitcoin, but there are over 5,000, and our guest will correct me if I'm wrong on this. There's 5,000 alternative type coins or 12,000 cryptocurrencies. Bitcoin is the big driver. The fascinating thing about it is that there's only 21 million coins. So because of its limited number of coins,
It's driving up the value.
It drives up the value. So it's creating an intrinsic value. And some are likening it to gold. One of the big differences there, gold has a long history. There's obviously value to it because it's physical. It has stood the test of time through the centuries, when there's an economic crisis, that gold has maintained its value. Crypto, it's in its embryonic stage. It's evolutionary that we're going through this, and perhaps it will be part of that, the gold and silver, precious metals.
I can't see where it won't, because we're doing so many things this day and age using debit cards and credit cards, and everything's online and the cell phones. And this day and age, I can't see why this won't become part of everyday usage.
Yeah, and fascinatingly enough, there's more and more, as I said before, governments are using, educational institutions are using it as a form of acceptance for payment and exchange. It's just becoming a medium of exchange.
Mm-hmm.
So with that, what I'd like to do is I'd like to introduce our guest. We've given a little bit of a background about it. Perhaps he can give a little bit more background. We could touch on the fundamentals, but what I'd like to do is also for our listening and also watching audience, since we are a video podcast, perhaps we could also have him explain a little bit about his background, what he does, and some of the trading aspects, because that is, that's what we're also trying to do, is bring attention to possibly not only our clients, but prospects and other professionals as well, the importance of incorporating this into an investment allocation. So, for example, you and I, as professionals, we generally recommend that individuals have precious metals of somewhere between 3 and 5% or so. They should at least be doing half of that. Whatever they have in precious metals as an inflationary hedge, probably should be doing the same when it comes to cryptocurrency. And I'm not specifically saying that they need to be in Bitcoin, but cryptocurrency is broad.
Yes,
and we're going to learn that today, because there's also the infrastructure, and we'll touch on that perhaps, the blockchain, and how all these transactions are made, and that's through blockchain. So that's the infrastructure. I'm not smart enough to get into all those details. What I know,
I don't think either one of us are.
No, and that's why we have a special guest. So allow me to introduce Dr. Tal, right?
Yes, Dr. Tal.
Tal. He is, I have to be full disclosure, he is also my dentist.
Okay.
And he has been, I'm going to allow him to introduce, but I do know that, over the many years that we've always talked, he knows what, you and I do.
Correct.
And he would always share with me that he was trading in cryptocurrency. And I thought, gee, this would be great. We're doing podcasts. Perhaps we can have him be a guest and explain to people how, he's been doing it a long time, and explain what his his approach is, his philosophy.
Right.
So with no further ado, Doctor.
Thanks, guys. Appreciate you having me on the show. It's very exciting. I told my wife I was going to be in a podcast. She kind of was like, huh? Podcast? You're a dentist. I said, but I'm a dentist that's been trading crypto since about 2012. And I know more about crypto than almost anyone I speak with, because it's brand new. And just to quickly touch up on what you said, I took some notes about being a commodity. It's being pushed in Congress and in the Senate to be a commodity. About the infrastructure, we'll talk about the Bitcoin hash rate and what that is.
Mm-hmm.
So a lot of people are confused, and they don't realize that the Bitcoin network is exponentially growing. And then I think it was yesterday where Mayor Eric Adams, New York City mayor, who took his first 3 payments in Bitcoin, okay, very smart. His goal is to make New York City the crypto capital of the globe.
Interesting.
And he's got a lot of competition there, because Miami is leading the way currently. So to say that Bitcoin is not mainstream is, I don't want to use the term silly, but
is it foolish?
It's foolish to say that Bitcoin is not mainstream. And we're in a semi-bull market at the moment. So your limo driver is going to talk about Bitcoin. The store manager is going to talk about Bitcoin. A financial advisor may ask you a question about Bitcoin. Your hairdresser is trading Bitcoin while cutting your hair. So we're in a sort of a drive toward something much larger. And when you have the general audience looking at your product, you have something really good. So just to give you guys a little intro about myself, I am a dentist. I happen to be your dentist, which is a lot of fun. People always ask me, is it weird to see your patients in the supermarket or
that didn't happen to us,
or elsewhere? Oh yeah, and we bumped into each other at the supermarket. And the answer is no. Honestly, it's really not that weird, because, as a dentist, I'm 100% a dentist. But outside of the dental office, I'm just your neighbor and your friend and
You're in
just
the
a regular
community.
person.
Yeah.
So it's actually rewarding to work on friends, family, especially family and people that I know. And when I bump into them, it's great because we have a professional and a personal relationship, which is always fun.
Exactly.
I read a quote the other day on X. I thought it was great. I don't remember who said it, but whoever said it, please get in touch with me. Bitcoin is not a trade, it's a way out. I thought that was very significant because a lot of people see the global monetary system at the moment in a destabilized position, correct? We look at the dollar value and what the dollar is getting, and things are more expensive. So your average nurse or your hygienist are paying more for the products that used to cost maybe a little bit less because your dollar was purchasing power was a little bit higher. And about 10 years ago, you could have purchased your house with, say, 600 Bitcoins. Today, it's about 10 Bitcoins. So the purchasing power of Bitcoin has increased exponentially, while the purchasing power of your everyday currency has decreased.
The fiat currency, which nothing backs it, hence the term fiat.
Correct.
Right, so
And
there's-
why I use the term currency and not money. Because, when you guys are talking about gold and silver, which most, even myself, look at as hard money, true money, many people now are looking at Bitcoin as true money because of its finite supply. Does that make sense?
It makes sense. Well, the currency, where does that come from? You went fishing, currency is
right.
and
The
it can
waves.
flow
Correct.
and flow away and not have much value.
Right.
So.
I wrote down a couple of other things that were very interesting, which we can get into the conversation. One of them, I had to share with you guys that Shake Shack was giving away free burgers this month. I mean, I thought that was great. Not related to crypto. And Let's Go Knicks, of course.
Of course.
And Dan Moorhead, he's the Pantera CEO. I'm quoting him. I used to tell people it's going to zero. I don't think it's possible now. 50 million people own it. 300 million people globally. BlackRock and Fidelity are selling it. It has reached escape velocity. And this is not coming from my mouth. This is coming from Pantera CEO. Grant Cardone bought 1,000 Bitcoin from its real estate profits. I thought that was very interesting.
This is all very recent.
This is very recent, yeah. I'm giving you clips of, well, since you have asked me to be on the podcast, I've been taking little snippets on my X feed and thinking what would be interesting to talk about here. And maybe just as an introduction, so that whoever is listening to us, or perhaps for you guys, just to pay a little bit more attention. You guys know who Howard Lutnick is?
Yes.
Mm-hmm.
He sits right beside our President Trump. And he was interviewed by Anthony Pompliano, who's a very amazing crypto figure. He's been in crypto since I've been in crypto. So Howard is the CEO of Cantor Fitzgerald.
Mm-hmm.
And he said, and I quote, "I have hundreds and hundreds of millions exposure in BTC, and it will be billions. Every time Bitcoin dips, I'm going to be a buyer." Okay, and this is, I'm just quoting what he was saying. "I have the BTC lending." I thought that was very interesting. Cantor is going to be the sponsor of Bitcoin into traditional finance. And so will be the leader of it we're going to be the leader of it. That's what he's saying. All the banks, after we do it and show people how to do it right, they'll all copy. And so the asset of Bitcoin, as it becomes more accepted, it will become more valuable. And the whole Bitcoin nation should call it a commodity, never a currency. Bitcoin, which is rare and special and will become ever more rare, as we both know, ever more valuable over time, it will be financed just like gold is. Bitcoin will be financeable. Bitcoin will be way, way, way higher, sometimes lower. You just have to have faith.
And patience.
This is only the beginning of some of these notes that I took for you guys. There's some other very interesting pointers that I would like to, discuss. But what's happening in the Bitcoin world is that adoption is here. We are starting to build major infrastructure around the Bitcoin community. I also took a quick note here. The Treasury Secretary said a couple of days ago, we believe the U.S. should be the premier destination for digital assets. And there's some other pointers that I have here, but I don't know if we want to kind of get into some
Well, one of the things that's
discussions.
really happening is what you're describing, is that it's becoming, there's a big push for it to become mainstream, as you pointed out. Mainstream, more like a traditional investment. And it is, in effect, disrupting the global financial system in a way. So we are in the midst of this, whether we like it or not, it is happening.
And we're still early.
And it's as I mentioned earlier, it's in its embryonic stages.
Right. When people ask me, how much is Bitcoin? I say, it's only 0.1 of a million. Now, it takes somebody a little bit of time to think about that, but people say to me, what do you mean it's only 0.1 of a million? Is it going to be a million? Yes, it will. When? Everyone wants to know when. Is it going to be a million tomorrow? No, it will not. But we haven't spoken about the Bitcoin halving cycles. But as you mentioned, that there's 21 million Bitcoins that will ever be created. And we're getting up there in the creation of the entire supply of Bitcoin. So it's getting more and more rare. And of course, there's a lot more people on the planet than there are Bitcoins. So naturally, what's going to happen is that the price of Bitcoin has to reflect the supply of the Bitcoin that's being mined globally.
Versus the demand.
How is Bitcoin mined?
That's a great question. People always ask me, what is Bitcoin? Do you guys know what Bitcoin is? Do you guys know the real logistics behind Bitcoin? Not really.
No,
Probably
most people
not.
do not.
Probably
Right.
not.
No.
So Bitcoin is a global network. And one of my favorite, I guess, mentors or people that I listen to very heavily is Max Kaiser. He's been a crypto pioneer, I should say, from the very, very beginning. Have you guys ever heard of Max Kaiser?
I've heard of him,
Yeah.
yes.
Max was in the banking industry many years ago, and he called Bitcoin when it was maybe less than $1. And he always talks about the Bitcoin hash rate. And I'll try to explain this very easily. The Bitcoin hash rate is the computing power globally of the network. So let's say we have a Bitcoin computer, a mining computer that actually is going to help us create the Bitcoin. Now, let's say that we have 300,000 of these computers and we decide to open up a Bitcoin mining facility. We are now helping increase the global what's the word that I'm looking for?
Is it the power that's...
It's the computing power, the global computing power of the Bitcoin network.
So these are, what you're describing is what we are building out is the data mining centers. Is that correct?
Yes, we are building the Bitcoin infrastructure and we are increasing the security of the network with every single computer that gets plugged into the network. So if the network is attempted to be hacked, every computer in the network, which is millions and millions of computers, will have to agree. There must be consensus between all the computers globally in order for somebody to be able to break into the Bitcoin system. So when Max Keiser talks about the Bitcoin hash rate, he's talking about the security and the amount of data that is controlling and securing this Bitcoin market. And Bitcoin is a means of a transfer, correct? It is a global way to transfer data securely and accurately between two parties without a third party involved. No middleman. So when I send a Bitcoin to you, it's logged in the network, and once it is logged, it can't be unlogged. It's there forever, and you can see every transaction.
So this is creating visibility
and transparency.
And transparency, trust, and accountability as well.
Correct. Between the parties that are transferring in this particular system. Bitcoin mining is a very interesting topic as well, because there are amazing facilities here in the United States that mine Bitcoin. And people ask me, well, what is a Bitcoin? Bitcoin is a mathematical algorithm. And I try to always give the very simple analogy of A plus B equals C, where C, which is the answer, that's the Bitcoin. So if we're trying to figure out a math problem, right? Let's say I give you a math problem, 2 plus 2, and you say, I can figure that out. It equals to 4. Well, because you found the answer, that answer is the Bitcoin. Does that make sense?
Makes
Jim,
sense.
does that
Yes.
make sense to you? It's a lot more complex than...
No, I'm getting the gist of what you're saying.
Yeah, it's a lot more complex than the way that I put it, but I'm just trying to put it in very simple terms so that you can visualize it. And these computers all over the world, these little mining computers, they're competing against each other to fabricate or to find the answer of 2 plus 2. There are computers globally, millions of computers at this very second working around the clock to figure out the algorithm and to figure out the answer. Does that make sense?
Yeah.
So because the global demand for the Bitcoin mining machines is growing as well, and more countries, sovereign nations, are building their own Bitcoin mining facilities. We look no further than El Salvador. Sovereign nations are now incorporating this into their strategy of competing in a digital world. And I do believe the US is leading the way. The Trump administration has been extremely verbal and very positive, speaking about crypto and, I guess, opening up the floodgates for what's coming in the crypto world. So the Bitcoin network is a 24/7 network. It has never gone down. Nobody owns it. Okay, it's not like a company can say, hey, let's shut down the network for maintenance. It just doesn't work that way.
It's decentralized. It's not controlled by a government.
Correct.
Unlike the Federal Reserve, in our case, that we have a central bank that controls our country's currency. And most countries do have a central bank.
Yes.
So question for you. This is one of the things I think you and I kind of touched on when we were speaking last week, is this is the paradox, I suppose, is that countries are beginning to accept it. Individuals and businesses are beginning to accept it. But at the same token, there's resistance because governments and central banks can't control it. Is there truth to that?
In one way, yes. However, I don't know if I wrote it down here, but the mayor of Vancouver said just a couple of days ago, it would be financially irresponsible for the city not to buy Bitcoin. I thought that was very interesting. Bitcoin surpasses Amazon to become the 5th largest asset in the world by market cap. I thought that was also very interesting. Meta is looking to introduce crypto payments for users. 3 billion users on Meta. And the SEC commissioner said that tokenization cannot reach its full potential without legal clarity. That was May 12th. So I think we are reaching the point where clarity will be here, but it's going to take time, because it's not going to be tomorrow where we have full clarity. I do believe that banks were given the okay to custody crypto, or they're in the talks of being able to custody crypto. And I thought it was very interesting for me to hear that, because, you know, the financial elites years ago called it rat poison, right? Said it was a waste of time. But at the same time, in the background, they were creating the infrastructure of what the banks would use to custody crypto.
Something that's unregulated.
Something that's unregulated yet. But you got to think, many years ago, when the higher-ups in the currency world would say it's rat poison, yet in the background, their banks were coming out with ways to be in the market, right? So they were strategizing
behind the scenes. Well, it's the old saying, don't do what I say, do what I do.
Right.
How I act.
Right. And I forget who it is. I think his name is Coach JV. He's a very prominent X account. He's great. He always says, when everyone looks this way, I look this way.
A contrarian point of view, huh?
Right. So every time I hear him say that, I'm like, I hope somebody's listening to what he's saying, because I've been looking this way for so many years. And it happens to be that the Bitcoin chart is up here. And when they first disown it, or they say to disregard it, there's got to be a real reason for that, right? So first they hate it, then they sue it, right? Because they sued Ripple, and it was a very big lawsuit that Ripple won against the SEC. And now we're in the regulation phase. So first you hate on it so that everyone will say, okay, this is really terrible. Then you sue it. And everyone says, well,
Well, things are changing even from the accounting perspective.
Oh,
now,
yes.
the SEC has gotten involved. Now there are Bitcoin or crypto ETFs and mutual funds, and so they're trading with that on Wall Street. In the beginning, you can only market to a loss. You could not market to a gain.
Right.
Now you can.
Correct.
So as each passing day or month, this continues to change. You know that they're doing this, as I had stated in our opening comments, because there's money involved and there's
Yes.
profit involved.
Yes, I think Michael Saylor touched up on a great point. And Michael Saylor is the CEO of Strategy B. This is the new name to his company. And he touched up on, I'm blanking out on my thought process there because I'm looking at an SEC letter that I printed out here. So I'll get back to Michael Saylor in just a second. But you were talking about the SEC for a moment there. And I thought this was very interesting. And this is the SEC letters to Dell Technologies. So Dell Technologies sent a letter to the SEC asking them if they can include Bitcoin holdings in their investments. Okay? So Dell
on the
balance sheet. Right? So Dell is asking the SEC, hey, SEC, is it okay if we include this on our balance sheet? And the SEC replied on May 8th, 2025. They essentially said the proposal requests that the board of directors conduct an assessment to determine if adding Bitcoin to the company's treasury is in the best interest of shareholders. And accordingly, we will not recommend enforcement action to the commission if the company omits the proposal from its proxy material in reliance of Rule 14A and so on and so forth. So the SEC wrote this letter to Dell to exclude a Bitcoin treasury proposal from its 2025 proxy materials, classifying it as ordinary business operation. This means that the SEC views cash management, including investment decisions like holding Bitcoin, as a management responsibility, not a shareholder decision.
Okay.
So to touch up on what the SEC is doing, the SEC is saying, this is your responsibility. If you want to put it on your balance sheet, then it's on you. Mm-hmm. It's not on us. So you do your thing, but if your shareholders are pissed at the end of the day, that's your problem. Right. That's not our problem. So essentially, it's leading the way for companies to say, and I think Michael Saylor is one of the only one with, how open he is about the amount of Bitcoins that the Strategy B is purchasing.
Now, Michael Saylor, what company did he own prior to this? Because I know his.
For some reason, I'm just blanking out on his name, and I should know this.
That's okay. Don't mean to put you.
But on May 12th, he tweeted out, Strategy has acquired 13,390 Bitcoins for $1.34 billion at $99,856 per share. We hold 568,840 Bitcoins acquired for $39.41 billion at $69,287 per Bitcoin. So he is leading the way in being the company that is acquiring Bitcoin and creating an entire market around the Bitcoin. So as with traditional markets, we will see the Bitcoin world grow, and we will see traditional lending done with Bitcoin or Bitcoin as a hedge. There was a real estate transaction in Miami, I believe, just this week, where somebody purchased a condo exclusively using Bitcoin with no middleman whatsoever. It was a, cell phone to cell phone transaction, and here you have the apartment.
And the transaction was completed.
The transaction was completed
digital cash.
That's correct.
Okay, so let's go to that before we get into maybe some of the trading aspects that in your philosophy. So from what I understand, there's 5 types of uses for crypto. You just described one: digital cash. Is there programmable money? Using it as collateral, which you mentioned, lending. One that I read is governance nodes. Maybe we could touch on what that is specifically. And then, of course, the NFTs, the collectibles, the non-fungible tokens. So is that correct that those the 5 uses fall into those categories?
Okay, absolutely.
Okay.
I'll touch up on digital cash. So that's pretty simple, right?
You just described an example.
Hey, James, can I buy that pen from you? Okay, that'll be 0.000001 Bitcoin. Okay, let me send that to you right now. And we'll get out our cell phones. I'll transfer the Bitcoin to you, and you receive it. It'll take a little bit of time with the Bitcoin network, depending on the time of the day. And you receive the Bitcoin, and I get your pen. Okay, so it's a form of transferring money globally. And it's a form of transferring money globally in a very inexpensive way. Okay, so if we wanted to move $100 million from here to Dubai, let's say, and we would go to our traditional banks and say, well, we'd like to move 100 million. How long will it take to move that using a traditional bank? $100 million. Days.
Yeah, it's going to take
days,
time.
If not weeks. I mean, the regulation is unbelievable. How about with Bitcoin? Can you move 100 million in Bitcoin? It'll take about an hour.
I was going to say, it's going to take
much less.
Yes.
And with other cryptocurrencies, it may take seconds to move that sum of money from one place to the other in seconds. It's like getting a text message. Mm-hmm. Unbelievable. Take me through your second point there, James, because I didn't write that down.
Programmable money.
Programmable money. Yes, absolutely.
Smart,
programmable money is a little bit scary for me to think about, because when I think programmable money, I think of central bank digital currency, which is a topic that
we don't necessarily want to go there, because we witnessed innumerable times around the world where people's bank accounts were cut off because they didn't agree or they disagreed with something.
Right.
We don't want to get into specifics, but...
Right. Remember that when we talk about cryptocurrency, we're not really talking about currency. we're talking more of a commodity. So we should be calling it crypto commodity versus cryptocurrency. But because the name currency has just flown out there since the very beginning, people are very comfortable saying cryptocurrency. But we should be really saying crypto commodity, because Bitcoin is a commodity.
Or at least only crypto, perhaps.
Or at least only crypto, correct. I remember what I was going to say about Michael Saylor there. Maybe a year ago, he gave an amazing lecture. I'm sure everyone can find it, where he showed a chart where will Bitcoin be in the next 20 to 30 years in the global money supply. And he showed a picture where Bitcoin had a small little square on the upper left corner many years ago. And over the years, that square is getting bigger and bigger. And you have real estate, you have the bond market on there, you have the real estate market on there, you have gold on that chart. And every one of these, real estate, gold, they all have their own boxes. And Bitcoin is starting to grow and grow and grow. And he's projecting that it'll grow much more than gold. So it'll overtake gold at some point. So the box of Bitcoin within this sphere is getting larger and larger.
And shrinking the other assets, in effect. In that,
yes, I wouldn't say shrinking the other assets. I would say just shifting the sentiment and shifting the ideology of the globe into realizing that we are now transacting in a very different world than we were 10 years ago and 10 years before that. Correct?
Yep.
So Elon Musk came on X the other day, maybe it was yesterday, I think, and he projected that Tesla were going to build 5,000 humanoids, robots. That's what he's projecting. He called it a Roman legion, right? And I think he was giving the analogy that a Roman legion had about 5,000 soldiers, and now you have 5,000 humanoid robots. And I thought that was very fun and interesting, and a little bit scary in one way if you think about this dystopian world. But the language of the robots is not currency. It's digital. So when you are going to ask your anonymous vehicle, and when the anonymous vehicle is going to ask you for payment, you're going to pay with your phone, right? Probably through the X app in some form of a stable crypto that they will develop, right? Like USDC or USDT stable coins. And so we are quickly moving into a world where the digitalization of everything is more mainstream and accepted, and the payments is more accepted with a crypto versus, like using Visa or MasterCard. It's faster, it's cheaper, it's easier to use. Mm-hmm. You can use it with your cell phone very quickly. It's right away. You get into your anonymous vehicle, it takes you from A to B. It's going to give you a QR code. You scan it with your phone. The phone opens up your X app. You click the payment, and boom, the transaction is finished. Takes seconds. So we're moving into that form of the global community is accepting that we are now more digitized. Mm-hmm. Right? I'm 45 and I know a lot about this, but if you speak to my nephew who just turned 16 today, okay, happy birthday, Hunter. I got to give him a shout out. He gets this. I mean, he talks to me about, he showed me his cell phone, like when we were scuba diving 2 weeks ago in Jamaica. And I'm looking at his cell phone and I'm like, your cell phone is very neat. Like you have everything in folders and you know where to go. And your brain just thinks, let me organize everything so I can get to it very quickly, right?
Mm-hmm.
Whereas if you kind of look at my cell phone, I think because of laziness, I just have my main apps on my front page. And then if you scroll through it, I have all of the games that my daughters like to play on my phone, right? But when you look at this 16-year-old guy and how organized he is when it comes to the tech, now you're thinking, okay, so this is where this is all going. It's this younger generation that's coming in that's highly proficient with the technology that needs everything done right now. They don't have time to wait to pull out a Visa from their wallets, and they just want to put their phone, pay for it, and get out of there. We talked about collateral lending. That's coming.
Yes, we did.
That's huge.
It's already happening.
It's already happening with staking. It's called staking. So in the crypto world, we could lend against crypto. Of course, there's a lot of companies that will lend against your crypto. So you can go to these companies and say, look, I have 10 Bitcoins. I'd like to take a 10% loan against my Bitcoin. And you put your Bitcoin up as collateral and they'll give you $100,000. And that's a lending form of the stratosphere with this. Governance and nodes. It's very interesting because I think Charles Hoskinson, who is the founder of Cardano, he is like the Tim Cook, like who was before Tim Cook? I forgot, for Apple. Steve Jobs. So Charles Hoskinson's, in my eyes, is the Steve Jobs of the crypto world. And he was also tapped by regulators and our government to help formulate the roadmap for where the crypto world is going to go. Brilliant mind. And he always talks about governance and how important it is to have a consensus within the network so that when you say go to the voting booths, there is no possible way to cheat the vote.
Because of what we spoke about earlier.
Well, because in a global network open ledger, you cannot have a double transaction. The network will not allow it. Does that make sense?
Yeah.
So if I sign the document right now, there's a possibility that you can forge my signature, right? Because you have it on paper.
Mm-hmm.
I always watch that show where people are coming into the they want to trade some of the, like a coin that they have.
Pawn shop?
Pawn shop, yeah. What is that called?
It's on, it's the History Channel.
Yeah, the History Channel, the pawn shops. And people come in and they want to pawn this, I don't know, Elvis Presley signed sneaker or shoe. And then they get an expert and the expert is like, I hate to tell you, but this is a fake. And the person that bought it is like, are you serious? Like, how can this be a fake? It's impossible. I bought it at another auction and they said it was real. Well,
there you go.
It's a fake. So it's worthless. And then sometimes these experts come in and they're like, you have a genuine signature here. And, the person wants to sell it for $5,000. It's actually worth $50,000. And then I love that guy in the show. He's like, well, you wanted 5,000, but I have a heart, so I'm going to give you 15,000. Like he's giving them more money than what they asked for. And then, of course, they bargain, and it's always fun to watch. But in a governance world where every transaction is counted once and only once, and that transaction is true, at that point, you can't go back on the transaction and you can't change it. So the signature is real, and I can't go back and sign it again. The system will not let me sign it again. Okay? And that's great.
It's permanent.
It's permanent, and it eliminates fraud.
Well,
and then
that actually brings a different type of question here. For today, it eliminates fraud.
Yes, that's correct. For today, it eliminates fraud. And what will happen with the AI, it's a topic of conversation, and I'm sure the brilliant minds in the sphere are also discussing that. And we're discussing how can we ensure that these super mega computers can still have true and honorable consensus. And that's a topic that I'm not so good at currently, because I just haven't read too much about it. But I'm positive that in the future we will need additional work on how to keep the network safe. So far, it hasn't been broken.
Right. Today.
Today. The last thing you touched up on was NFTs.
Right.
The collectibles, which, crypto goes through some amazing cycles. The big thing with this cycle is the gaming coins, the AI coins. That's a huge discussion in the crypto world.
It's becoming a big market.
But in the last crypto cycle, and by me saying the last crypto cycle, I mean the last halving cycle, which we should touch up on. Do you know what that is, Jim? The halving cycle?
I do not.
Okay. So in the last bull run, let me use that term. In the last bull run, NFTs were like the big thing.
Right.
And the technology for the NFTs is amazing, because with an NFT, it's also a form of saying, hey, James, I'm going to send you this NFT, and it's authentic. It's original. It's the only one. There's a permanent record of it on the ledger that you and I can go and look up, and we can verify that this non-fungible token is the real one, the true one, the one that the creator has made. Okay? One of my neighbors is an artist. He's amazing. And I always discuss with him, and I say, you need to make this piece of artwork attached to the digital version of the artwork. And when you sell the two of them together, the buyer has the original artwork that they actually can hang on their wall, right?
The physical.
The physical one that you can touch and feel.
Mm-hmm.
And then in their beach house in the Hamptons, they have a digital version of it, right? But that digital version, they can also have it on their back screen in their office, right? They can mirror it anywhere they want, and they can essentially enjoy that piece of artwork anywhere in the world, knowing that it's the original one. So where the interesting part is that anything can be turned into an NFT. And because there's one of it, and it's the original one, Okay, we can think about, let's say the Knicks are playing tonight, and I was texting one of my best friends last night, and I was like, did you get tickets for the Knicks game? Because I really wanted him to take me. And he said
he wasn't reaching out to him to be nice.
Yeah,
he had an ulterior motive.
I was like, did you get the tickets? And he's like, no, my buddy couldn't get it for us. And he sent me a screenshot of the original tickets. You know, they were like section 200. They were about $230, $260. And they were selling for 5-6 times that value, right?
Yeah.
So now if you think about those tickets, they are transferable, but sometimes you have these scalpers out there standing there selling tickets. And, you know, I would hate it if somebody goes to MSG and they buy this ticket and then they get to the gate and they can't get in.
It has happened.
And, you know, like, I mean, the crushing feeling that you have when that happens is, you know, unfortunately, some people get scammed that way. But what if somebody was sending them the NFT? Okay, so what if somebody was really trying to sell the tickets and they can verify that that is a genuine ticket, right? So now you're coming up to a person and they say, look, I have this ticket. I can't go in there. I need to do something else. My kids are sick. We can't go. I'm trying to sell it. Do you want to buy it? So now you, as a smart consumer, you would say, is it real? Okay, let's verify that it's real. And you can verify it in real time on your phone and buy that ticket from that person with your Bitcoin or however you want to buy it. And that will allow the fraud, in a sense, to be eliminated.
Interesting.
So also the non-fungible tokens in the last bull cycle were very cool because a lot of high-end stores, high-end purses, you know, the ladies' purses, Gucci, Chanel, they came out with digital versions of their purses and they were selling for a lot of money because it was an original digital version of the purse and it was very limited supply and people globally wanted to have that digital purse. You know, you can put it up on your screen. You can't physically hold that purse, but there is a market for those purses and you can trade those purses just as you can trade some of the original NFTs, the Bored Ape Yacht Club. You guys may have not heard of those, but they were all the rage back in the day where they were pictures of these cool gorillas and they were in all forms of places and spaces like on a boat or in a concert hall and they were selling for a lot of money. And of course, they were selling up here, then they came down, and now they're making their way back up. And people want those NFTs. They want to own those NFTs because they are rare.
Interesting.
So,
whole new market.
We touched up on a lot of interesting points here, and it's all a way of trading and accepting this new digital world. And I got to say something about the NFTs. They were real hype, and a lot of them tanked. Okay, so, you know, if you purchased one for, say, $50, today it's worth 5 cents because nobody wants it. Right? However, in the NFT space, there are some companies out there that are still leading the way in the NFT world, And those companies have a whole community behind them, and those communities will drive the success of these NFTs. And it's funny I say the word community because a couple of months ago, I went out with a few of my friends to a Brazilian, what do you call them? They're like, you go in there and they slice the meat for you. It's a lot of fun. Yeah. And one of my colleagues called me, and I had a few minutes to chit-chat crypto with him. And I said to him, I thought about it very hard, and I said, we as dentists work very hard, right? We own a dental practice. We got to come into work every day. I've been practicing since 2006 in my residency. And I have called out twice. 2 times I was not feeling well. That's the only time that I ever called out sick. Since 2006 to today, I've missed work twice. Now, our generation, we are extremely hard workers, or I think we are. We're very hard workers. And our mindset is that we need to work as much as we can all day long so that we can finance our families and finance the future of our children. And it's getting harder and harder for the younger generation to build what we were able to build. Why is that? Because the purchasing power of the dollar has been decreasing so quickly, and the global monetary supply has increased dramatically, correct? That it's getting harder and harder for these youngsters to achieve this American dream that we have achieved. Right? Which,
in effect, yes.
In effect, yeah.
In effect. So where is the younger generation going?
They're going to create new.
Yes, they are going into the meme world, the NFT world. They're creating communities within the crypto space that are going to drive those communities to success. Because, you know, when you and I go on our cell phones, we normally, maybe we'll check the news and we'll check our email, right? But I don't think the three of us here spend a lot of time on Facebook and Instagram and TikTok and YouTube and watching videos for hours and hours and hours.
We do not.
But the younger generation is doing that.
Right.
So with the younger generation, their way of finding success will be through these NFTs and through these meme cultures. And I can get into some of the meme coins.
Actually, we're going to have to
we are over time.
Yeah, beyond our time.
So what we will do is we've covered a lot on an introductory basis. So perhaps at another date, we'll you come back and we can go over some of the different trading, not only in Bitcoin, but some of the other various cryptocurrencies that are available, as you say, crypto commodities.
Yes.
And we can touch on those.
That would be great.
How's that?
That would be great.
I think it would be awesome.
Yep.
Because it can be a conversation that is just ongoing and ongoing. We can speak for hours.
And this is a great introduction, and that's what we will label it. And we'll have you back, and we'll get into more of the trading aspects and a little bit more of your philosophy, what you've done, and how you've grown from, your early years until now. How's that?
It would be a pleasure.
Okay,
we'll
wonderful.
Look forward to it.
Thanks, guys.
Definitely was a pleasure having you.
Thank you.
Thank you, Doctor.
Thank you for joining us on this episode of Enlightened Wealth Strategies. We hope you found today's discussion insightful and inspiring. If you enjoyed this episode, don't forget to follow and subscribe to our podcast. You can find us on YouTube, Apple Podcast, Spotify, or your favorite podcast platform to stay updated on new episodes.
Your financial journey doesn't end here. Connect with us online for even more resources and exclusive content.
Until next time, remember, financial enlightenment is just an enlightened wealth strategy away. Investment advice is offered through Bell Point Asset Management, LLC, 500 Demont Ranch, Parkway Building 700, Unit 700, Reno, Nevada, 89521. Additional information about Bell Point Asset Management is available on the SEC's website at www.advisorinfo.sec.gov. It is important to read our disclosures available at this link, www.bellpointasset.com/disclosures. The information provided in this presentation is educational and limited to the dissemination of general information. This material is not intended to be a recommendation of any kind, investment, tax, or accounting advice. Does not constitute a solicitation to buy, sell, or hold a security or an investment strategy. Engage in any financial transaction and is not provided in a fiduciary capacity. The information provided does not take into account the specific objectives or circumstances of any particular investor or suggest any specific course of action. Investment decisions should be made based on an investor's objectives and circumstances and in consultation with his or her financial professionals. While the advisor uses reasonable efforts to obtain information from sources believed to be reliable, the advisor makes no representation that the information or opinions contained in this material are accurate, reliable, or complete. All information and opinions contained in this material are subject to change without notice. The views and opinions expressed are for informational and educational purposes only as of the date of the production or writing and may change without notice at any time based on numerous factors such as market or other conditions, legal and regulatory developments, additional risks and uncertainties, and may not come to pass. This material may contain forward-looking information that is not purely historical in nature. Securities offered through Fortune Financial Services, Inc., member FINRA and SIPC, Bell Point Asset Management, LLC, and Fortune Financial Services, Inc. are not affiliated. Past performance is no guarantee of future results. Investing involves risks. Principal losses possible.